Welcome to the daily trade wrap-up for Monday, March 14th. It's been a pretty active day for a Monday. Our best trade set up overnight, and I don't typically trade overnight, but this was so clean I could see it on my phone, and went ahead and pulled the trigger on it. But basically, on copper, this is a daily chart of copper, we have a hoagie forming. Right, this was Friday's bar, so we currently have a hoagie, and this is also a good setup bar. It has a large upper tail, red body, closed at the lower end, so breaking below that low signals the change of direction on the daily bars. Further breaking below the hoagie low would further confirm that. But here's what I saw overnight that was just too clean to pass up on. Right on the reopen, we went and did this, push down below that low, and then we got a very clean A, B, C. I don't think there's any funky bars here either. We got, I guess this one's inside, inside, down, 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 up, up, and then right at the top, we have a beautiful hoagie again on the 15-minute. And if you watched this on a 30-minute, it looks the same. You didn't have the hoagie, but you had a better setup here, and this was just a doji bar at the top, and everything was extremely clean. Up, down, up. Typically, as you go into a higher time frame, you do get less noise, so things look cleaner. And then that move, that the size of that entry bar was about 1.45. And we went all the way down to 449.6, 459.4, divided by 1.45, 6.75 Rs. I was out at 4. 4 is kind of my go-to, especially when I don't have my computer and I'm sleeping. But so that was a good start to the day. And then on Friday, if you remember, we mentioned the indices would set up the best shorts. And I wanted to go over a couple of the indices because they could have played out in different ways depending on which index you picked. I wanted to focus on the Russell, and so we can see this is, again, a good setup bar. 77.70, 76. Okay, so it is slightly outside. Slightly outside bars can lead to a little more volatility when they break, but the direction change is still the same. Here this is a down bar, this is an up bar, inside is up, outside is up, and then breaking below here changes this upswing to a downswing. So let's take it down to, I believe it was the 5-minute where it became clear because the break didn't happen until the morning. So there we go. The break happened after the open, so until the open we didn't break below previous day low, then right on the open we did. And you're probably getting better at just viewing these without individually doing the bars. But here you have a down bar. This is outside, so it's down. This is down. This is down. Up, up, up. And there is something a little funky here if you pay real close attention. We have up to down to up, and this is technically a down bar. So you might have gotten caught shorting here, except remember, we don't want to short below a bar like this. This is not a good setup bar, and it's usually a good sign that it's going to go it's going to stop you out and give you another a better setup bar. So this ended up being a lower low and then an up bar and an up bar. So it's not your super clean 2 waves only. The second wave had 2 waves there, but that set up a good setup bar, which has a bigger upper tail, a big red body, all of those characteristics. And this got over 8R to the downside. This bar was 83.70, 370, about 480 in size. And 480 times 8 is 38.40 off of 78.90. 40 and a half and we handily got to 40.5 by this bar right here by 12:30 in the afternoon. So from this being your risk bar right here, 8 times your risk right there. Now I wanted to show you how the same trade basically played out in the Nasdaq, and the Nasdaq was a little sloppier. So Nasdaq did make a more pronounced outside day, and we did break below before the pit open. So the first time we broke below was at 6:25 in the morning. And over here, you could count this as an up, down, up, and this was a pretty good looking setup bar being red. And then you had an outside bar which took you into the trade and then stopped you out. So you've got one stop out right here. Now if you said, okay, well now outside bar doesn't change the direction, so we still have an up bar, well then this became your next setup bar, and we know that we don't like setup bars like that. But the tempering factor there is it became a hoagie, and we had 1, 2, 3, 4 bars within it before breaking down. So, if you were nimble, you caught something in here, but then this right here is the 840 bar. So this is the pit open, 830 to 835, 835 to 840, 840 to 845, and that would have come and stopped you out again. It's getting frustrating. I'll show you the way we can avoid those. But remember, each time you get stopped out, you lose 1 R. So, assuming you followed this textbook without any other contextual help, you stopped out 1, lost an R, stopped out 1, lost an R. Now here's a new low, and off of this new low, we had a very clean up, down, up, inside, outside, outside. So up, and since this was a hoagie, you wouldn't have pre-triggered in there. So this became a very clean trade that did not stop out. And here we're talking about 92.50 minus 37, about 55. I know we got at least 4 on that, so that's 222 points. 333 is 115. So down to 115, that was 4R. So it looks more like 5-ish R. That's 4. So we probably got 5, 5.5. So again, if you can lose 1, lose 2, make 4, you're still doing okay. Now, let me give you some contextual clues on how to have avoided this. The first thing is just time of day. So the open is, they typically call it amateur hour. It's when a lot of people come in with a lot of emotions that have been piling up all day long, and this is the first time they get to trade, and they're typically not, there's typically an initial fake out move to get people positioned the wrong way. So waiting for the open is potentially one thing that could work, and each market has its own special timing. So here, if we would have just waited for the open, then we had a very clean A, B, C up, and we had no fake outs. And the Russell helped you wait for the open because the Russell didn't actually break below to give you the precondition needed for the setup until the open. And each market has its own time. For crude and natural gas, the pit open is 8 a.m. Central. For stocks, it's 8:30. Natural gas also has a funny thing around 6 a.m. There's a weather report that is released every day, so sometimes you get those climaxes and those setup bars right around the 6 a.m. time frame. So, get to know your market and know when those specific times are, and that will also help you avoid a couple of the fake outs. But worst case, take the fake outs. Take every trade. If someone gives you a loaded dice, where you win on 1, 2, 3, 4 and you lose on 5, 6, just keep rolling it. You're going to get your 5s and 6s, but overall you just got to keep rolling it, and you'll come out ahead. So that was those two things, and I wanted to talk to you also about natural gas. Now, this did break below the previous day low, But this is not a setup bar. This is a bar where we're going higher, and yes, you can get a pullback in there, but that's not the type of bar that you would expect good follow through from. Like, for example, this setup bar, amazing follow through. Here, even though this was red, it was pretty much a doji. It was losing momentum for a couple of days, and this would have been a decent move to the upside, a decent place for us to try a Forex trade to the upside. Same thing here, although this was bad, then you kind of had a day of repair. So with this as your setup bar, this would have been a great long to take for the Forex trade. So what does this look like as we break it down? Let me remove all of these. So the first break below was here, and this is a one-legged swing up because this is outside. So then this is a one-legged swing down. Now, if you were stalking this, you would notice A, B, C up, and this risk bar did give you a little bit of love down here, probably 2R, but then it did stop out. And then if you tried it again on this, which is not the best setup bar, you do have a big tail, but it is green instead of red, you still probably did okay, 1.5, maybe 2Rs. But you can see how it keeps stalling out and not giving you the huge win. And that is a function of the daily setup not being very good. And another thing if you notice, up bar, up bar, up bar, this is your down bar, but it didn't spend a lot of time below. It couldn't even muster a close below this bar, just a tail. And then we're back into up bars. And again, getting 4 green bars in a row is pretty impulsive, which kind of changes your mind from this being a corrective move to an impulsive move. And if you remember, the other factor I wanted to start looking at, but I haven't actually done yet, is your first wave relative to your second wave. This first wave is relatively small, 506 to 582, so about 7.6 cents, and then this goes from 53.5 to 66, about 12 or 13 cents. So it's a significantly larger second wave than the first wave. So those are all factors that kind of mitigating, which as you see a setup bar and it's not that great, one of the things you can do is go back and check your daily and make sure this is a good trade that you want to be in. Sometimes you get protected by the setup bars just not setting up or just not triggering. But don't count on that to save you. Be proactive in understanding which setups you really want to get into, which ones are good, which ones are bad. And there's no reason to take a bad one. If you've been watching my videos, there's 2 to 4 of these setups every single day. If you can catch one of them and make 4 times your risk, that's plenty. There's no reason to chase bad setups. So that was natural gas. Now, looking forward to setting up for tomorrow, I think natural gas is actually a decent setup for tomorrow. And again, one of the things I need to do, since I've been leaving early lately, is double check the bar in the morning or after the close to make sure that it still looks like I remember it. Here, it's getting a little worse. It would be nicer if this body gets a little smaller. But if this body gets a little smaller, then, to me, off of this high, we kind of had an A, B, C. This C didn't go lower, but if we take out this high, we could potentially have some decent upside there. So, as long as this red doesn't get a whole lot bigger, I would be inclined to take that tomorrow. The other thing I saw setting up was the British pound, and we can also recruit the help of Taylor here to see. So this is a 2P ROC buy divergence, meaning prices went lower, but momentum did not go lower. We already got a price flip today. So if we do break above this high tomorrow in the British pound, I would look for that setup. And again, it really depends on when it happens, whether I'm looking at a 15 to 30, etc. is going to depend on when that break happens and what it looks like. And I believe the euro had a similar setup. So the low here is 9015, the low here is 9045. So maybe I looked at the wrong one. There we go. we've switched over to the June contract. I was looking at the wrong one there. So here, 939, 9365. So we did get a lower low and a lower high. So, you know, this could be the formation of that lower high. And if we take this out, I would be inclined to look for that situation here. Let me make sure I was looking at the correct one on the British pound. Yeah, on the British pound, I'm sorry, I had the March contract up. The June contract does not look as pretty. You know, I'd want this to be green to take a stab at it. So the euro and the natural gas are probably the two best looking ones. Crude, nothing to do there. Gold, nothing to do there. S&P, nothing to do there unless this closes up, you know, something weird happens that doesn't look probable right now. You know, wheat, which I don't actually have data for wheat here, but wheat did make a higher high. I wonder if I could at least get the daily chart here. So, yeah, today we took out this high. Or did we? If you have wheat data, you know, you can just follow the same guidelines here, and you know that is a good setup bar. So if we take out that high, and let's see, this bar is from March 11th, Friday. So I do believe we did take out that high today, 26.2. Let me check it over here where I do have wheat data. Yeah, we did take out that high. So, you know, if that's something that you trade, you could also be looking for it here. And what makes this a nice setup is this is a massively impulsive move. And this is the first pullback, the first confirmed break above a good setup bar. So if everything else falls into line, this could be a really good risk-reward trade because you could capture a retest or, you know, another impulse in the direction of the trend here. So that's it for today. Again, I love your questions. I'll try to address them, you know, in the context of real things that we're seeing in the market. Keep dropping the comments, and if you like it, drop a like and subscribe.